Okay, hello everybody. I'm going to show you real quick, which is the S&P 500, which is the major measurement of the stock market. The long-term model, these types of things have to be analyzed economically, okay, with economic movements of the market, which is different measurements of the economy, and that will determine what's going to move the equity markets longer term, okay, to see if these companies can flourish and gain more earnings. And it all comes down to the consumer spending, believe it or not. Consumer spend, companies make more money. People invest in the stock markets, and that's how it goes. Okay. And that's with the long-term models. You can't use that stuff on the short term, but we're using it on the long term. Okay. And you'll see my models are extremely accurate. Here, I'm going to show you something. Let me make this a little bigger here for you. Here's our long-term economic model right here. Excuse me, here it goes. Okay. This is the S&P 500. It gives you the longer term direction of what should be happening for the coming year or two. Okay. So all the way back, this particular chart here shows almost 20 years, about 17 years or so. And you see that this thing was constantly moving to the upside and more economic positivity coming through until 2019. It was a bit early, but when you're dealing with long-term models, and dealing with economic measurements, those things are not precise on something happening this week. Okay, it doesn't work like that with the economy. So the models are the best things for the longer term stuff. And the problem with those is that you're not going to catch the exact top or exact bottom, things like that. But you can get pretty close, and we've done a pretty good job on measuring these things. And so this particular model has fired off these particular signals right here. And there's about 7 different inputs that we use for this model, and they're all economic inputs, things like jobs and interest rates and things like that. And that gives you the overall scenario, what should be happening with the stock market. Okay, so this is the first thing we look at, which is our longer term scenario. This is included in the S&P Investor membership. And you also get the S&P 500 net cash flow, which is crucial. It's crucial to measure the large traders, the hedge funds, things like that, that measure the net cash flow in, net cash flow out of the stock market. Okay. And we draw levels here for you to show you where there's major disruption really in the cash flow. You see that here in 2022, we were given great signals here. I don't know why this never fired off here. I remember it exactly. I can remember this week and month right in here. But I thought it was going to get more negative cash flow scenarios. It did not. But nonetheless, the market kept going down. But we did get a very negative cash flow measurement here, all the way down to a beautiful positive scenario here. And then we got nothing but positive since then. Now, if you look at this one right here, it looks like we were wrong or early or something like that. But remember what I told you is that these things generate the major movements of the market. So not going to catch the exact high, exact low, things like that. So we're looking for the major movement, what's going to happen for the coming months. And when you actually put these things together, you're going to get some dynamite stuff. Okay. So here you see in the last, oh my goodness. So we're in April here, more than a year and a half. This thing has delivered nothing but very positive net cash flow into the equity markets. And we're coming up to a very significant point there in the markets right now. But we'll give you that information. I want you to become a member.